Welcome back, everyone. We have some time-sensitive information, so don't worry, the alert was not clickbait. But here today, September 3rd, 2023, Cameco has released a press release speaking to providing insight into their production and market update. So let's get into this. I'll just read it to you, but the gist of it is, and we're going to cover a lot in this video. So the gist of it is that they're cutting their production forecasts for the year by 2.7 million pounds, which is approximately 8.18% of the yearly projected output between their Cigar Lake and the McArthur River mines. And to put that in perspective, 2022 production globally for uranium was roughly 194 million pounds. So they're reducing the global supply according to 2022 numbers by 1.39%. Now you might say that's not much. What's the big deal? And the big deal is that these things get priced on the margin. So maybe there's a percent or two wiggle room, and just imagine oil or any other commodity. If the world consumes 100 million barrels a day and you only produce 98 million barrels, the question is, who doesn't get the 2 million barrels, and how much are they willing to pay to get the 2 million barrels? So you can have these reflexive feedback loops that can really spike the price and re-rate stocks and so on and so forth. So let me read this, and then we'll get into some fun facts, history, because this is reminding a lot of people of the Cigar Lake incident of 2006. So I'll read this. So here we go. Cameco provided a market update today regarding challenges at the Cigar Lake mine and Key Lake mill that are expected to impact our 2023 production forecast. At the Cigar Lake mine, we now expect to produce up to 16.3 million pounds of uranium concentrate this year, a reduction from the previous forecast of 18 million pounds. Production from the McArthur River Key Lake operations for 2023 is anticipated to be 14 million pounds, down from the previous forecast of 15 million pounds. As previously reported, mining activities at the Cigar Lake operation were initiated from a new zone in the ore body, the West Pod, in the second quarter of the year, which impacted productivity. As mining activities continued in the West Pod during the third quarter, equipment reliability issues emerged which further affected performance. The mine is scheduled to enter its planned annual maintenance shutdown that will run through most of September. At the Key Lake mill, ramp-up activities remain ongoing. However, as noted in our second quarter MD&A, there is continued uncertainty regarding planned production in 2023 at Key Lake due to the length of time the facility was in care and maintenance, the operational changes that were implemented, availability of personnel with the necessary skills and experience, and the impact of supply chain challenges on the availability of materials and regions. These factors have combined to impact production at Key Lake, leading to the reduced forecast. The McArthur River mine continues to operate well and is expected to achieve its planned production for the year. Any ore from McArthur River that is not immediately processed at Key Lake will be stored in inventory for future milling. Cameco's strategy of full cycle value capture positions us to effectively manage the expected production shortfall and meet our delivery commitments to our customers. We maintain the flexibility to source material through various means beyond production if required, including increasing our market purchases, pulling forward long-term purchases, using inventory, or borrowing product. Any pounds we do not produce this year will remain available to us, and with increasing supply pressure, potentially become more valuable when delivered in the future. We have exposure to high prices under the market-related contracts in our long-term portfolio and pipeline of contracting discussions underway, which we expect will also benefit from the increased focus on securing access to scarce supplies and generate long-term value for Cameco. And we have a strong balance sheet to help us self-manage risk. This expected production shortfall further highlights the growing security of supply risk at a time we believe the demand outlook is stronger and more durable than ever, and where the risk has shifted from producers to utilities. Uncertainty about where nuclear fuel supplies will come from to satisfy growing demand continues to drive long-term contracting, with clear evidence that the broader uranium market is moving towards replacement rate contracting for the first time in over a decade. This is the type of contracting necessary to promote the price discovery already seen in the enrichment and conversion markets, and that is expected to incentivize investments in the supply needed to satisfy the growing long-term requirements. This unplanned event may lead to variability in the other outlook provided in our second quarter MD&A for 2023. However, it is too soon to quantify what the impact might be. We will provide an update when we better understand the implications these production challenges may have on market dynamics. The Cigar Lake operation is owned 54% by Cameco, 40% by Orano, and 5% by TEPCO. The McArthur River Mine is owned 69% by Cameco, 30% by Orano. The Key Lake Mill is owned 83% by Cameco and 16% by Orano. Okay, there was a lot said in that, and maybe the monotony of my voice or just reading through multiple paragraphs, getting the vibe of them saying, don't panic. You know, when someone tells you don't panic, that means panic. So there's a lot in this. And for instance, they essentially say things were shut down in care and maintenance for so long, they kind of went to hell. And now we can't get the materials, we can't get the regions, the supply chain is messed up, and we can't get skilled workers to do the damn job. And, restarting things and exploring new operations isn't going exactly as planned. Okay, then they go on to say that it's now the utilities problem, not the producer's problem, where who buys in the markets, whether that's the contract market or the open market, the spot market. Well, that's utilities, even though people like Cameco, because if you can buy in the spot market cheaper than what you can produce it, which is the past few years what they've done, then that matters too. And they go on to talk about how, hey, we might not sell as much now because we're not producing as much, but we assure you that actually this is going to ramp up spot price to the point that when we do start producing it, we're going to be more than well compensated for the increased spot price. And they also talk about how things are being done more and more in the term market, the 5 to 15 year securitization of uranium as opposed to the spot market. And this might give the nudge that utilities need to panic. So that's simply put some of the things that they've said in this. Okay, so what do you do with information? Well, you use it to put yourself in formation. So two of the common ways, excuse me for all the so's, I kind of scrapped this all together last moment because I thought it was relevant to make a video over this. Cameco, if you're playing uranium and you're playing it through one of the ETFs, you're either playing it through URNM or URNJ. In URNM, Cameco is a 17% weighting. Which is to say, you might say, well, if Cameco falls on this news, which I wouldn't be so certain about that, and it won't be as much of a fall as what you might think, that's my opinion, that, okay, it's 17%, but hold up. I would think that this is going to increase the uranium spot price, the physical commodity. So if the physical commodity goes up in price, then it would make sense that the Sprout Physical Uranium Trust might go up in price, as well as the yellow cake might go up in price. Well, Sprout Physical Uranium's 12.7% and yellow cake is 14.19%. So that's 16.9%. Cameco 17.2%, rounding up, rounding down. So I would think that in and of itself will offset any fall in the Cameco spot price. Now that's just my thought. Now on the other end, URNJ does not hold Cameco, and the reason they also don't own Sprout Physical, and that's because they own mid, small, and micro cap uranium plays. Now they do have yellow. Well, I thought they had yellow cake in here. Maybe they don't. That's my bad. Anyhow, Cameco's not in this. So URNJ, I would think, will hold up better and outperform URNM, which naturally it would. It's a more leveraged play and so on and so forth. So in a raging uranium market, I have no doubt that URNJ will outperform URNM. But on a short-term time horizon, next few days, next few weeks, I would believe that URNJ will see outperformance over URNM. And like I already said, I don't think Cameco will take much of a hit. What's my belief on that? Well, let me tell you why. October 6th, 2006. In October 2006, a rock fall in the underground production area of the mine led to flooding. Mine operator Cameco expected that closing bulkhead doors would contain the water inflow and protect mine shaft number 1. The future processing area pumps, a refuge station, and a heat exchanger for ore freezing. So what happened was Cigar Lake flooded. So what happened to Cameco stock? Well, this is what happened in Cameco stock. That was October 6th. That happened. That was a Friday. On Monday's open, Cameco stock fell. Now, the interesting thing of it all is, and we'll get to the falling after this slide. So what happened was, October 6th, flooding happens. October 9th, Monday, markets open. Cameco closes the day down 0.5%. And then it kind of trades sideways, you could call it, for a couple of days. And then by October 20th, Cameco's actually up 8%, 8.18%. So a week and a half later after the mine floods, it's up 8%. Now, by November 16th, we'll call that a month and a half later, it fell 10% from the flooding date. And then it goes on to make new highs, and I don't remember, up. It goes and trades up into 2007. Interesting head and shoulders pattern, by the way, on this chart. So if we zoom in, Cigar Lake flooding happened on a Friday. It ended up closing on Monday down 0.5%. It bounced and retested. So it then bounced on Tuesday. Then it fell back down on Wednesday and retested that short-term low. And then ran higher for the next week and a half. And then it capitulated into November to where it bottomed, down 10% roughly, to then run back up. Because what happened, and we'll get into this more, is that the revenue cost due to production was compensated due to higher prices. So what I want to do, and this is why I love Twitter, and I think Twitter is better than most subscriptions, paid subscriptions that you could access or get to, insofar as you follow the right people. It's all about using your resources and initiative and making the right decisions. For as much as I promote Twitter, I mean, I couldn't do what I do without Twitter, or I'd be a lot less efficient at it. So some of these people are really good follows. So John Quakes says, I find that predicting uranium price, and then the rest of this video, and actually this might be the most important part of the videos. So what do? Do you buy? Do you sell? Do you do nothing? And the good thing is this is a long weekend for many, at least for the markets, because tomorrow is Labor Day and the markets aren't open in the US, and therefore you have some time to think about these things and consider factors and come up with your own game plan. So we're going to go through what a lot of people think. A lot of these people I'm familiar enough with, these accounts, I should say. I'm familiar with these accounts and are respectable accounts insofar as I'm concerned. And they do influence my decisions. So we're going to go through different takes, opinions, conspiracy theories, and so on and so forth to add some clarity and context and interpretations of the matter. John Quake says, I find that predicting uranium's price is a fool's game, but this reduction announcement from Cameco certainly raises the probability of a spiking spot price in the days and weeks ahead as panic sets in amongst nuclear fuel buyers, as other miners face same challenges. And then he goes on to say, but the price they will receive on their Q4 deliveries will likely more than compensate for any supply shortfall, as this does not affect their sales volume except to raise the invoice price when they make their deliveries. This is a production cut, not a sales cut, which is to say, price will offset and compensate for the production loss. You're selling less of something, but at a higher price, essentially. And you could say, but now they're going to have to go to the spot market, because I also find it interesting, and we'll touch more on this, what's going on in Niger and Aramco. They say they might get it elsewhere. Where? Aramco says they're going to get it elsewhere after the whole uranium thing. Everybody keeps saying they'll get it elsewhere. But this game of musical chairs isn't going to have enough seats. Someone's going to fall short. And the question is who? And does it really matter? Because you're going to be making money if you're participating in this trade. So even if they have to buy into the spot market, but their term contracts are stipulated in part as to what the spot market's doing. So any term contract, since we're in a term cycle, as they noted, this is why it'll probably be beneficial for Cameco, just like it was in 2006. Yellow Bull says, only this time we actually have a real and significant supply-demand gap, with an uncertain supply side where secondary supply is shrinking and an incredibly robust demand side where the demand is growing. The setup is incredible. Paulo Macro, which I recommend you follow, says, this is beyond anything I expected, and I already have massive conviction, i.e. size. Yellow Bull says, and the best part is that it's yet to really get going. All the puzzle pieces are falling into place, and if a few more are added, all bets are off with regards to how high this thing goes. Looking forward to WNA next week, which is priceless timing, because what he's referencing there is the World Nuclear Symposium is starting to take place next week, and this is quite the timing, so I'm sure that'll give them something else to talk about there. Cuppy, Harris Kupperman, if you don't follow him, you're not doing things right, says the last uranium parabola started when CCJ mines had issues. Hilariously, Orano, I think I was calling it Aramco, I'm sorry. Hilariously, Orano just keeps getting shorter uranium that they pre-sold. Niger and now Cigar Lake. Because as we noted in that second slide, when I was reading their press release, Orano shares in those mines ownership and thus production and thus pounds. Oh, by the way, in the description you'll find the link to both this chart and the upcoming chart, as well as that press release. Biggest uranium companies by 2021 production. You'll see Orano, which is, I believe, the state-owned French company, France, is one of the largest uranium producers. And it just so happens that their primary producing assets are in Niger, which is causing all kinds of problems. And actually, Global Atomic, as a side note, would have been a good a trade I thought about getting in, but I just don't want to take on the risk and speculation. And actually, it's good assets and production and looking promising, and I just couldn't buy the dip, but something to look into as well. But Orano is one of the largest producers. and you see, largest 10 uranium mines in the world by 2021 production. And here the chart shows Orano in Niger and now Cigar Lake in Canada. So, more comments. A possible mitigating positive scenario for Cameco and Orano is that knowing the production miss was coming, this is the conspiracy theory, they purchased pounds in the market ahead of the announcement. Maybe that helps explain the strong uranium price during the typically quiet month of August. Now, I don't know if this is if that's legal or illegal, or not really sure. That'd be interesting. If any of you know, you can comment. And then Circular Logic goes on to say, I don't know who these people are, but I was told by several smart people this conspiracy theory was bunk. But now after CCJ Cameco announcement, does everyone still think so? The timing and the aggressiveness of keep Sput from raising looks even more suspicious. And the conspiracy theory was noted on August 18th. Last week on Tuesday, sell orders poured into Sput relentlessly in first 10 minutes, just as it had closed Monday near the ATM. Since then, the spot price has risen just about every day. I guess when whoever is buying in spot now is done, Sput closes NAV gap fast. Now that's an interesting conspiracy theory, isn't it? Because it's not like the day of this press release, September 3rd, is when they realized this happened on a Sunday. Like, no. Like, they saw this coming. And this goes on. Kevin Bambro, I believe he was a guest on Macro Hive podcast by Brandon, and well worth a listen. He says, as expected, production issues and personnel shortages and supply chain. These issues plague all resource sectors as they try to ramp up after a protracted bear market, bull in commodity price. And that's what they said. We can't get the right help. We have shortages in supplies. Things are taking longer than expected. We're running into difficulties, so on and so forth. That is a consequence of protracted bear markets and trying to get your feet back under you again. Cameco management never should have aggressively contracted out so much uranium. I stand by my call that their bear market mentality and super conservative contracting policy will end up costing shareholders billions. But don't confuse this with their share performance targets. The acquisition was a great call, and they will remain a go-to stock for big cap investors and the Cathie Woods of the world that don't care about actual earnings and return on investment. Momentum investors will continue to support the company. Look, they're a large cap company. They're a safe bet. And I believe that. That's where people were pouring their money. Mineral Stocks investor goes on and says, if Cameco, the best established and largest Western uranium producer, cannot find skilled people, imagine how the smaller developers in remote locations or geopolitically unstable countries will struggle. Now that's well worth a thought, now isn't it? Might that speak to other uranium producers falling short on their projected production? Sounds like it.